What if I told you you don't need tens of thousands of dollars to start investing in real estate? Well, in today's episode on the Furlough Capital Real Estate Podcast, we're going to show you exactly how you can get started with $1,000. And that's because we dive into the intricacies of passive real estate investing, where we
invest in
properties
and
oh my gosh, where we equip people to invest wisely, whether that's $50,000 or $1,000 in both properties and people, so that together we can build wealth while improving housing. I got this. I'm James, and this is my wife, Jessi. It's a lot harder than it seems.
It is harder. I've tried to say it a couple times, like in my head along with you, and I'm just like, nope, I'm lost.
It's like if we're having 60 some odd episodes of saying the same thing, and now I'm messing with it.
You're tweaking it.
Yeah.
That is like, I don't have any leeway. I was going to talk about gardening.
Oh, okay.
And then we were talking about intros, and that just didn't flow.
That's fine.
I wanted it to flow. Anyways, gardening.
It happens which reminds me, sometimes there's people who want to invest.
That's right.
But they just don't feel like they can because they get told by people like me, like, hey, man, like you got to have $50,000 to get in on some of these deals.
Yeah.
Well, what I want to do is I want to make it so it's possible for more people to earn $50,000 so they can invest with me.
Oh,
okay.
Here's
the bias.
I see what you did
right?
there.
Yeah. I want to help people accelerate their wealth building to get to that next level so they can passively invest with me.
Okay.
So that's what I want to talk about is I've got
side hustles?
No, these are...
I'm so interested in like how you're going to tell
so,
people to increase their wealth.
So here's 8 ways that I was able to come up with.
8 ways.
Now, for the most part, you're going to find for a lot of them. If you don't have money, what's the other thing you got?
Time.
Yeah, or skills or expertise. And so that's what they're going to involve. So here's a classic one that a lot of most, I don't know, when you go to most forums and they're like, I don't have a lot of money, how do I get involved?
Mm-hmm.
Number one, they go wholesaling. Start doing that.
Okay.
So what you do is you find motivated sellers, get the property under contract. You usually don't need to do a lot for the earnest money down, like $100.
Mm-hmm.
And then what you do is you find someone else who's willing to actually buy it and do whatever the investment thing is, and you get paid an assignment fee for it.
Mm-hmm.
And so you spend your $1,000 on either the software or getting leads, and that's what you spend your money on. Get a deal, then you're off to the races.
Interesting.
I actually tell people this all the time who I'm talking to them, especially like younger dudes who like want to get into them. Like, fine, cool, find a property. I'll pay you for it. And, as long as it meets my criteria, here's what my criteria is. And I'm like, yeah, I'll give you a few $1,000s.
I could see, I don't know if I would just like go out on my own and start finding stuff, but I could see what you just said, like partnering with a sponsor who you're feeding deals to, and they give you some parameters and criteria for like, look for these types of things.
Yep.
And
by the way, that's true for anyone listening. If you find a deal that I like, I will happily pay you for it.
Nice. And it's kind of like they're learning along the way, so that as they're growing and investing.
Which honestly, like finding good deals is a massive skill to have just all on its own.
Yeah.
And so, so that's a way to get involved. It doesn't take much, especially if you're driving for dollars.
Sure.
There's an investor in town, super big. I remember talking to him when he was going to Oregon State. He talks about how he rode around on his bicycle looking for deals, knocking on doors. And now he's building multi-million-dollar stuff ground up. And and he goes, that's how he got started.
Yeah.
And so it totally works. There you go.
Right.
$1,000.
There you go.
Okay. I'm stretching this one, I'll be honest. So you can house hack a place. Okay. So you can use $1,000 as a portion of an FHA, or if you qualify, a VA loan. A VA loan is often 0 down, which is awesome. And you can even have the buyer pay for some of the closing costs to get in. Obviously, you got to qualify for it. FHA, it's I think it's like something ridiculous, like 2.5% down, 3% down. It's not much.
Slow.
And so you can do that, and then you can. The nice part about a house hack, if it's a duplex, you rent out the other place, or if it's a single family home, you rent out the other units. Okay, I did some numbers here. Do you remember what our down payments were for some of our early places? No, I did the research. You're welcome.
No, I do not.
So for our first duplex, we did $11,000 down, and then we got a $9,000 tax credit.
Yeah, that's right.
Right afterwards. So it nets to $2,000.
Yeah.
So it's close, not bad. Okay, our one on First Avenue, we did a down payment of $5,000 and we used our tax refund to do it because we had bought a place earlier. And so
I do remember that.
Yep. And then how about this one? Our 11-unit place, our apartment building, famously, we did $3,000 for it.
Yeah.
And we were able to pull that off because we had some seller financing.
Okay.
So they're not quite $1,000 deals, but I want to make the point of like,
low.
You can get some super low down payments in there. Now, all of those required work.
Sure.
And the cash flows, the return on investment percentage was amazing, but because the down payments were so high, you're like, the cash flow
so low.
Yeah, but so that's one where it's like you really got to look, and depending on where you live, you can make it work. I think if you're in Corvallis, you're not going to hit that 1,000 just because the down payments, even at those small, unless you're a VA, then you could do it. Sometimes, honestly, like you can partner with a VA and they qualify for the loan, and you go, cool, we'll partner with this together, get the VA loan.
A VA loan is for veterans, right?
Yeah. Okay. Yeah. So that's another option. Find a veteran who wants to invest and do it with them.
That's interesting.
Move in, house hack it.
Yeah.
Okay. I like this idea. I thought I was proud of this one. So I do talk about how we have private lenders, and oftentimes our minimum investment is $50,000. Sometimes it goes as low as 20, depending on the size of the deal, but it's tens of thousands at the end of the day.
That range.
So what you can do is it's kind of a combination of if you find a good deal, you could say, hey, instead of paying me for it, let me be an investor in it. Take that, what you were going to pay me, and let's roll that into a loan on this property.
Sure.
Or you can do, so there's this concept called a fund of funds. Okay, so you create I don't know how to describe it. So let's say you only have $1,000, but maybe you've got 9 other friends who all have somewhere in that like $1,000 to $10,000 range. Yeah. You go, guys, let's create a mini unofficial fund of the 9 of us to then get the total of $50,000. And then we will essentially create a single fund of our funds, a fund of funds.
Yeah.
And then we'll go and we'll do a private loan on something, and we'll split it proportionally and whatever.
And as far as the sponsor's concerned, it's one contribution.
Yeah. And you can even set it up where it's like, hey, we're going to create an LLC and we're all partners in this LLC of some sort. Now, obviously there's tax stuff that happens and it may not be worth all that effort.
Sure.
It may just be more like, hey, we're all buds. We're going to create a little handshake thing, whatever. So you could potentially do something like that. Or you could just do an LLC and it should be a pretty simple tax return. But yeah, that's an idea, right? Find other people who are in your same situation, who are interested. And you could even couch it. I've seen this where I've seen it for real estate, for stock market stuff where they go, hey, we're a learning organization. We want to learn about investing. And part of what we're doing is everybody pays in to this group that they've started. And then we use the group funds to go off and buy stuff. And the whole point is for us to learn and figure it out. And so
I could see that being beneficial for younger people, even with the thought of like, I don't know if I want to get into investing. I only have a little bit of money. Yeah. Let's try something out and see.
Yeah. And what you do as a group is you could meet, once a week, once a month, whatever, and you review potential investments. Right. And you have the conversations and like all the conversations we've been having, especially that my due diligence download where it's got that 196 questions, like you work through those as a group, helping each other out, refining each other's skills, and you're actually investing, making money along the way. Yeah. Actually, that's a really cool idea.
It seems kind of fun.
It's like a co-op.
Yeah. Well, it seems kind of fun to do with other people who are interested in investing and learning. And, if you're just like, I got this chunk of cash, but I have no idea what I'm doing. That's a little, it's different. Yeah. It's just kind of like,
Yeah. And usually those groups work really well. Again, if everyone puts in the same amount of money each month, and then you elect essentially like a president, like you make it a club. A club, a president, a treasurer, secretary, all the things. And you go, yep, as a group, we're all voting. And if we, you make some rules, super majority, whatever, to do it, we're doing it. Like that's how you do it. And I think that's actually a really cool idea.
Yeah. Seems
for doing it.
Seems cool.
I don't know how to.
Seems
it'd be fun to sponsor something like that. You know, just to recognize, like, yeah, because like one of the reasons why we're having this conversation is I talk to a lot of people,
right?
Where they're like, "Hey, man, I hear what you're doing. Would love to get in." I go, "So it's like $50K." And I go, "Oh, okay."
Yeah, it's like,
and I'm like, "Oh, man."
Not
But
quite there
you
yet.
know what happens is they've got 5 to 10 grand sitting around,
Yeah,
and they're in their head going, "Oh, is that enough to get in?" Like, not quite, but you know, maybe if you pull it together.
So you're telling me there's a chance?
Oh man, I'm gonna try hard not to go down the Dumb and Dumber quote rabbit hole. It helps, duh. Oh, I love that song. We've been telling our kids about the most annoying sound in the world, but we have yet to tell them what it is. Just that it exists, and they keep
guessing.
Yeah, it's pretty
like,
funny.
Oh, not that.
I'm excited for
Don't
when
make
that day
that
comes.
noise either.
Oh, it's great. So yeah, kind of a co-op group. Fund of funds model, essentially, for
like
people
that.
just learning. And I think it works really, really well if you pair it with like, hey, we're a learning organization. That's the whole point of this. All right, next one. Here's another classic is you can invest in a REIT or crowdfunding. So a REIT is a real estate investment trust. They're essentially publicly traded funds. So you can buy the stocks. And oftentimes you can get in for less than $100.
And is that similar to a stock market for real estate?
Almost exactly.
Okay.
Like you can go to Robinhood, put some funds into the account, and search for REITs, and
interesting.
And you can buy them, and it's just like owning a stock. And then they pay more dividends. Like I can't remember what the rule is, but they got to pay out like a significant proportion of their revenue as a dividend.
Interesting.
It's like what's some qualified.
So
as
how
a
do
REIT.
how do you make money
no
from
tax
that?
advantages,
That
so.
doesn't. I guess I don't understand what a REIT is.
$100.
Yeah.
And they go, hey, yeah, we have a return of 6% each year, or 7%,
What is
or
it?
9%.
Like, what are they doing with the money though?
They're doing exactly what I'm doing, just at a much bigger scale.
Interesting.
And what they've done is they raised a bunch of funds publicly, and they go, yeah, we created $1 billion fund, and we're just churning that over and over and over again.
Interesting.
Yeah.
Strange. So you don't exactly know which deals are happening.
Oh, you don't? Yeah, outside of like you read their prospectus.
Sure.
Yeah.
Huh.
I think like BlackRock is one of the biggest, and they're buying like single family homes all over the country.
So if you want to be like totally passive, you could
yes,
do something like that. Just put money in and you get a return. Huh.
Yeah.
So what's the benefit of going with a sponsor and doing something?
Again, usually their
different?
returns are like 6 to 9%. You can earn more.
Slightly lower.
Yeah.
But you don't do anything really?
You don't, at all.
Weird.
Yeah.
Huh.
I think it's less fun, but yeah. One that's kind of a cool middle ground is there's platforms like Fundrise that are it's like crowdfunding. So they will actually have a specific deal that you invest in, and you can do something as low as like $100 or $1,000. See, what happens is for investing in real estate, it's considered a special kind of security thing, and so there's a bunch of rules around it, and so they limit the number of investors that like people like me that I can have in it. I can't have just like 1,000 people on it unless you get publicly registered with the SEC, pay all sorts of stuff, have all sorts of checks. Well, there's platforms like Fundrise that have done that. So they go, yeah, we can essentially let anyone invest any of the time. It's like a quasi-publicly traded type of thing. So you can go to their website. They have specific deals. You go, yeah, I'm interested in this one. Boom, I'll fund it. And then once they get it 100% funded, they take your funds, and then that sponsor goes off and buys the property. So I could have a deal that I bring onto their platform.
Oh, so it's different sponsors like partnering with Fundrise.
Yeah, Fundrise is
they're just like the
software
face
platform
organization who's jumped through all these hoops to be able to take money from different people. Interesting. That might be worth trying at some point just to see.
So I looked into like as an investor or as a sponsor.
Both.
Yeah, I looked into being a sponsor. They I don't qualify.
Oh.
Yeah.
You have to have done
a ton of experience, and they only do they don't do value add fixer upper types of deals. It's been they want the A class, just buy and hold, super simple, boring.
Sure. They want to mitigate their risks.
Yep.
Yeah.
Which is fine. They're allowed to do that. So
different philosophy.
So that's another one. You can look at their overall return. They've got all sorts of charts and stuff. But Fundrise they're the big dog. There's a bunch of them out there. But they're the big ones.
So cool.
All right, number 5. I like this one. Partnering and sweat equity. We talked about sweat equity a few weeks back.
That's right.
Oh, it was so good. We're essentially this is where you are trading your time for experience. So find an investor, and you go work for them, or you manage their properties, or you find deals. Whatever you do, you essentially say, I don't have the money, but I got the time. Let me, or some sort of skill. Let me help out doing it. And so, like, here's an example of ish. So we bought a mobile home for $1. We fixed it up. Where it's currently for sale, which is cool. Well, there was another mobile home in this park that they were willing to sell for $1. I did the math for our model. I was like, this doesn't work. It's not worth $1 for us. But I happened to be talking to a brand new investor who's like, I want to get in. I've got all this construction experience. And he had some cash. He had a little more than 1,000, but he had some cash. And I was like, awesome. Here's what you do, man. Let me give you this lead. Pay me for it. And then you go off and fix it up because his labor was essentially free. And the profit is what he pays himself. And so
when he sells it.
Yeah. And so he could just do it a lot cheaper because he wasn't hiring other people. He could go faster, all that fun stuff.
Yeah.
And so he was doing the deal, which is super cool. But it's a way that he was able to get into the deal super cheap. Now, in this case, he has to fix it up.
Sure.
And so he has to have more cash. So it's not a $1,000 deal. But, like, you know, in theory, he could have bought it for $1 and then he could go get a loan to do all the repairs if he wanted to.
Yeah, depending on how much he's going to sell it for.
Yeah, and he could get a loan against that mobile home once he owns it. So that is an option that he could do. So there's a way that you get in. But my point is, like, that's kind of this partnership. Honestly, that's more like the other side of it, more the house hacking kind of. But my other one was just like, you partner with someone. Yeah. You know, hey, let me help you. Let me come alongside you. Let me add value to whatever it is that you're doing. And instead of paying me, why don't you give me equity or do pay me? And use that to learn. I'm learning along the way. Yeah. That's valuable. I am, by the way, in the process of wanting to hire someone, an office administrator / property manager assistant type of role. So if you're listening to this and you're like, I would like to get in.
I would like to help.
I am interested in learning more. Hit me up. Let's talk. I'm interested. I'm hiring. All right, number 6. This one I think is fascinating. It's you can control without ownership. So there's a master lease with an option to buy. Okay, I actually really like this one from a creative standpoint. So
seems complicated.
I know it is a little bit. So typically, let's say you find a fixer-upper, you buy it, using a lot of money.
Yes,
you fix her up,
spending more money.
You either refinance it or you sell it, right?
Yeah.
Well, in this case, you don't buy it. Instead, you lease it.
Okay.
And if it's a multifamily, you just lease the entire building, not just your one unit. Even if it's a single-family home, you lease it. But then you have an option to buy it in the future for a price that's already been determined. So let's say fixer-upper, right? Let's just use some round numbers here. In its totally fixed up state, let's say it'd be worth $200,000. And in its current whatever, it's $150,000, right? So you go, hey, I will buy it from you 6 months from now for $150,000. In the interim, I want to rent the property from you. And I'm going to pay a normal mortgage, right? Maybe you do $1,000 as your earnest money, your lease fee. And now you do have a regular rent payment that will be coming up for the next 6 months. And in that time, you can go fix up the place, make it more valuable, get it to that $200,000 level, or, whatever, right? I mean, again, we're trying to do this pretty cheap, so you're maybe not doing a full gut. You're maybe painting or doing a few other small things. And then once it's more valuable, then you buy it at that more valuable rate. And ideally, the loan that you get is going to cover, so you're going to buy it for $150,000. But when they do the appraisal, they'll be like, hey, this thing's actually worth $200,000. Oh, cool. So the bank goes, awesome, we'll give you a 75% loan to value for this, $150,000. So you've now picked up this place for essentially no money or very little money down.
Yeah, that's interesting. Do you have to like, I'm guessing that it's part of the terms with the seller, you know, that you're agreeing, if they're agreeing to let you lease the place, they're also agreeing to let you make changes, fixes, whatever.
Yep.
Like you're not just.
Which for me, I'm kind of like, you got to have a track record. You got to be able to like,
sure,
or at least maybe partner with someone who does. You know, for me, I'm like, I'm gonna make this place better. So even if I don't buy it, you now have a place that's worth $200,000.
Right.
Sweet. They gotta trust me that I'll actually be able to do that. So you know, there's that.
That's interesting.
Now again, 1,000 as extreme, right? Like honestly, if you have like 10 grand, oh my gosh, world's your oyster. You can do so much. You can do all these strategies a lot easier.
Sure.
But like they're out there.
Yeah.
To do that. Extreme.
Well, and you can,
But my point is, you can control the property. You don't have to do the purchase up front. You can do a lease to begin with.
Yeah.
And then eventually that converts into.
Yeah. That is an interesting concept.
Yeah. We float that by a lot of people. Actually, I'm in the middle of a deal. That's exactly what we're doing is a lease with an option to buy. Now, we're actually not going to do, all right, how about this? We're not going to do any repairs to it other than we're going to clean it because he was ready to just get out of it. And so we were like, yeah, I'll tell you what, we'll lease it. Now, he's got mortgage payments, so we're going to pay those. So it's not $1,000 deal. And we actually gave him 20 grand up front. Like, we're going to have this. This eventually goes towards the purchase. Once he moves out, we will then make his mortgage payment for him. And we put it on the market and we're like, yep, we're just going to sell it. And we bought it at such a rate where we can then offer it as a good deal to someone else. And then they can go in and fix it up and capture all that sweat equity.
Yeah. Interesting.
Yeah. So that's where we're buying a $300,000 place for 20 grand.
Yeah. It is kind of complicated, but also it makes sense when you like spell it out. It's oh, okay.
So that's the idea. And it's just a question of how extreme can you get? How well can you negotiate it?
Yeah. I can see for the right person, that makes a ton of sense.
Yeah. All right. How about this one? Land flipping using seller financing.
Yep.
So it's same concept. So I once flipped a piece of land, bought it in Indiana. Eventually we'll do a podcast episode and I'll break it all down. It'd be great. But the idea was I went out, I did a bunch of letters, bought a place. They just wanted cash up front. And so I paid them $40,000 cash. And then I turned around, put it back on the market the next day. A few months later, sold it for a lot more. I had got like a 63% return on it. It was fantastic. And that's not even like, that was the annual return. I should do the math on what the monthly return is. Oh my gosh, that'd be ridiculous. Anyways, but sometimes you don't have to pay cash. Sometimes you get land owners who are like, you know what, I'll take seller financing. Like, give me a down payment. Could be as low as $1,000. Again, this is really aggressive.
Yeah.
But it could be a really low number. They'll do financing for the rest of it. And in the interim, you turn around the next day, list it, do a great job marketing it, and resell it. And then once you sell it, you go, cool, like I'm going to pay off that seller note from this new sale, you know, from the proceeds from the sale. And so it's a way for you to buy a piece of land. And land is nice because it's nice for a couple of reasons. Number one, it's often cheaper because there's no building on it.
Yep.
And number two, there's not a lot of competition out there. People don't do it. And part of me has been like, that I'm in the flipping game. I'm like, man, I should really I start looking at land again. Cause it's it's nice.
The thing about it is like, initially you look at it and you're like, what value does that add to anybody? You know, like why in the world are you buying this and selling it for more? Like really? But if you look at the scenarios of like who's selling the land and what they actually need and the timing of things, often they have a need that you're meeting.
Right.
As far as like they inherited this land, they don't want to manage it, they don't want to sell it, they don't want to build anything on it. They just want to get rid of it and get the cash out of it.
Yep.
You know, or various other reasons. You know, they're older and they can't develop it anymore and it's part of their retirement plan or you know, who knows?
Yeah.
And so what you're offering them is actually good.
Right.
For the person, for the seller.
Yeah.
And then you're flipping it and the value that someone sees in it to develop or build or whatever, lease it for something.
Yeah.
Like you're connecting the two.
Yeah.
So you are adding value and making connections, making that bridge. I had to like wrap my head around why it was good. Because initially I was just like, so you bought a piece of land and sold it for more. Like you did nothing to this thing. And I was like, okay, that's not exactly true.
I helped resolve an inefficiency in the market.
Sure.
Yeah. No, there was a person, she needed cash quick because she wanted to move to Mexico. She inherited a piece of land, so it was debt free for her.
Yeah.
And so she just wanted out. So I was able to do that. And then I had the staying power to hold on to it. And then eventually it was a couple moving from California was like, hey, we want to buy our dream house or build our dream house. And I was like, sweet.
Yeah.
Where you get the land is important. There's all sorts of stuff around that. And you just want to educate yourself on what it is. What is it? Jack Bosch land flip profits or profit land flips, or I think those are 3
You
words.
too can flip land.
Profit generator. I don't know, man. I took this course and it was awesome. That was what I used.
Yeah, I mean, it was you were able to follow the steps and do it.
It worked really well. Yeah. And you can do it for, again, 1,000's aggressive. If you got 10, oh my gosh, you can totally, no problem. But yeah, no, you can totally do it for a small sum of money.
Yeah.
All right, here's the last one. Okay. This is actually the one that you thought of eventually. Invest in yourself.
Oh.
Yeah. So if you got $1,000, again, as I've been talking about, these are all super aggressive. One of the things that is probably the less aggressive things to do is invest in yourself, right? Improve your skills in your job or your trade so that you can earn more. And I just like, there's a ton of them, but some that I was like, man, these are in a lot of high demand right now. It's like copywriting. Despite AI, I think if you're actually good at writing, I think that's a huge skill to have. Just becoming great at sales, right? I think is huge. Getting good at like Google, Facebook ads, managing all that, figuring it out. I have now spent enough time with it. It's crazy confusing. I've spent hours dialing stuff in, trying to figure it out.
Interesting.
It's finally working, which is great. I actually had 2 people. I got 2 meetings this week of people who clicked they clicked on a Facebook ad and went to our website, filled out the form, and
it's very cool.
Yeah. So it's working, but I spent hours trying to figure it out, which is now a skill that I have. Imagine if you were someone else who were like, hey, James, let me help you optimize, figure out your ads. I'm going to learn all this. So you can do it. Video editing, I think is like video turns out it's a thing. It's going to stick around. Or like construction skills. And I think is another good skill to have. And, you're talking about a side hustle.
Sure.
Like, man, if you could learn how to tile, like, man, you got yourself some weekend projects that you could do for the rest of your life and turn it into a full-time gig and make a lot of money doing it. Yeah. So the point is, invest in yourself and your education in skills that will just earn you more. And they may be related to real estate. They may not be. In my case, they're all related to it. And so it all, stacks on top of each other. Yeah. Kind of related to that too. I had some books that you could read if you were like, that's way less than $1,000 to get you started. Your
education.
Right. Never Split the Difference is one. It's all about negotiation. That's a huge, especially for like, if you are doing sales types of stuff, really good. If you are eventually going to get into doing active real estate, really good. Pitch Anything by Oren Klaff is another really super entertaining book. It teaches you, again, it's more like those are 2 sales types of books that work really, really well for real estate. But I think it's worth it investing in, say, an online course. I don't know. Okay, one like I'm going through right now is learning how to get your drone license. So you can use that for real estate stuff. Right. Course I'm taking, I ended up spending a couple $100s on it because it was just so much better than everything else that was out there. I'm like, yeah, it's worth the investment of it. And then you invest the time. Right. And I'm not going to, my intention is to use it for my existing business to add value to my clients, not to go out and actually earn money directly. But
if you didn't have that, you could, offer to make videos for other people. And
yeah, exactly. So I think that's a super value one. Spend $1,000. Investing in yourself is probably one of the highest ROI activities that you can do, just because you get such outsized returns for it. And so it's usually like, even though I saved it for last, like honestly, that might be like my first, like, I think I'll do on that one. Yeah. Which a lot of these things that I'm talking about, in order to do them well, you're going to have to educate yourself anyways. Yeah. You're going to have to do the research, read the book, talk to people, figure that out so you don't mess up, because you don't have a huge margin for error. And so that's it. I don't know. What do you think?
I mean, what it makes me think of is like just going back to the very fundamentals of finances and personal finance. And it's like, okay, if you don't have this chunk of money, take a look at your expenses and your income and make some adjustments. Like those are the 2 levers. So investing in yourself and finding ways to grow that income in creative ways and interesting ways, it makes sense.
Yeah, totally.
To do the full loop from the beginning. I was talking about gardening. I think I was talking about gardening.
Well, you wanted to, and then you opted not to.
Oh, that's right.
So that's okay. Go
Anyways, I was talking to Eleanor about a little side hustle.
Okay.
And because she has always loved playing in the mud, making mud pies. And so
she's a side hustler.
She is a side hustler.
I got hope she's going to follow my footsteps. We'll see.
She might. Like, she gets the idea of, like, I can create something valuable. I can set a price. Someone will pay me for that.
Yeah.
And then I can invest just a little bit of that, but I can keep the rest. It's like, oh, yeah, you totally get this. So she was talking about monetizing these mud pies.
Okay.
I was like, dude, yes, you're on your way. Like, we invested about $10 in flower seeds. She's going to make mud pies and include flower seeds in them.
Oh.
And then sell each of the mud pies that you can plant. And then it grows wildflowers wherever you plant this mud pie. And she's like, okay, so we pay like $10 for these flower seeds. If I make like 50 mud pies and I charge $1 for each, I made money. I'm like, yeah, you did. And you're selling dirt. Like, this is brilliant.
And seeds. She put in the time and effort.
And seeds. Yes, right. She put in some sweat equity.
Interesting.
Oh, yeah.
That's a great idea.
Totally gets the concept.
You have different types of mud pies,
right?
Different plant types.
You have different seed types. You decorate them differently. She has a whole
I feel like you have
system in our
multiple
front yard.
pricing tiers. You could pay like $2 and you know what you're gonna get,
Ooh.
or $1 for the grab bag.
Surprise
Who knows?
pie.
Surprise! It's a weed.
Surprise.
No, you don't want to do that. You make your customers angry.
Oh my gosh, a dandelion pie.
It's a fennel plant. You're welcome.
This is taking over everything.
That'd
be
awesome. Interesting. Yeah, no, exactly. There's the idea,
Yeah.
right? Yeah, exactly.
Yeah.
Man, I love it. It's going to be
I
awesome.
too.
Well, there you go. So that's what you can do. Again, I really hope that we showed you exactly how you could get started in real estate with only $1,000. It's not easy. I'm not pretending that it is.
Yeah.
But it's definitely possible. You don't need tens of thousands of dollars. If you're willing to invest the time and effort to learn how to do things, to put in some work, you can definitely do it. Now, if you happen to have $50,000 or you've got a group of friends that you can pool money together, we got some interesting deals that you might find interesting to look at. I would love to talk more with you about that. And so you can check us out online at furlough.com. Just learn more about our investing thesis and what it is that we're about. And even if you don't have it, I still love the chat because I love talking about real estate all the time. And I can even point you in specific directions given your proclivities and what you're interested in. So with that, thanks for listening. Have a great day.